trash can in here somewhere. You seen? Okay.
If you don't, yeah. So if you're a business, if you're in a startup,
Okay.
technically,
Just.
you would just say, the business is going to be set up for, and then what do we do for high risk work? Because a big part of it is also understanding the impact in the community.
Right.
Yeah.
Okay.
You have till midnight.
Yes, I mean, I'm pretty much there.
So your business is a full startup. Your business is a full startup.
Pretty much. I mean, I've been doing, I haven't been doing business, I've been doing it.
Okay.
So it's a consultant. So I've been in education for over 25 years.
So talk on it. You know what I mean? Talk about because this is part of your goals, right? So it's kind of a bit of got you here and where you're going to be. Don't be too literal. Do you know what I mean?
But I mean,
You've got some freedom in here to answer the question. But if some of the milestones were, really just getting set up and that's a milestone, right? That's you had something you had to do and achieve before you could move forward.
I mean, a milestone being hey, this is where I need to be now. Just going to another school and enhancing. I can go to any school and I know I'm going to next year. I've done it. So, the point was man, when I got into the classroom, there's a person that said, hey, I think she's in she can touch me. And now I'm at a point where I was like, I go to school. I know I'm at the school, so I can teach you.
But I feel like that is a milestone. That is a milestone, right? That's a recognition. I'm not going to put words in your mouth because I have to So I need to be right. I maybe ask. Don't have to ask some people. I'm going to do these, but I will say this. Don't forget. Keep perspective on the fact that how might other people answer that question? How might they answer it? So don't ignore a question because you think it's not relevant. Think about, there are peers in the room who will answer that question.
Right, yeah.
So what would they consider, and does that set them apart more or not?
Sorry, you're good.
How we would grade it from a rubric standpoint. So I think it's twofold, right? So it's twofold, right? There's going to be only 5 people that get through to the final, right? So at the end of the day, the question is, do you feel confident with what you're getting out of this? And did you submit a video for us to review? I don't know if you submitted a video for us to review or not.
Oh, right, yeah.
Yeah.
No, I didn't submit it.
Video?
No, not video.
What?
Just making sense, but this one,
Stand in front of the mirror.
looks like I understand 500 people and somebody says, okay, we just got started. That's not a good, I can see people easy. It's like, it's like
Stand in front of your friend. That's the point of the now obviously this yes, now listen, to get to that round, this you have to at least still do this, right? No more secrets. Do you have any YouTube videos that you're going to share?
nothing. Yep.
Aren't you guys the IT people? Were there a lot of...
That's, yep. No worries. Good, good. We do have one more that's now virtual.
This has been ongoing. I fell and broke surgery, so I've been on disability the last few weeks. So this is actually my first week, so I know I missed you guys. But I've been watching remotely, and I actually wish you could speak or like send messages because last week on the YouTube video, because of, you know, that's a YouTube link, I was sending notes on the YouTube link, but nobody sees it in the class.
We can't, yeah.
Do you know what I mean? Thanks. Good to be seen.
One more is now virtual, so 4 virtual.
So 1, 2, 3, 4, 5, 6, 7, 223, and we'll just...
Good. Ooh, there you go. All right, guys, in the essence of time, it is 6:02, so let's get started, if that's okay. It sounds very loud. Is there a way to turn it down? Is that loud?
Is it loud?
Is this too loud? Okay.
I can't tell.
All right. Hi, everyone. Hello. Hi, everyone. How are you? Okay, good. Ooh, yeah, have some energy. You got to bring me energy. I can't stand. I'm broken. So thank you. All right. I've missed you guys. I'm sorry I haven't been here and been a part of the program. I have been watching diligently virtually on the live stream. So I've listened into everything that you've been through. But before you all ask, okay, so I broke my foot, my metatarsal, and tore 2 ligaments in my ankle and my tendon. So 3.5-hour surgery later. This is like this is my big first outing. I'm not on drugs like I was anymore, but bear with me if I get fidgety because it's relatively painful. And if you all noticed, Gail has a boot too. We don't push people down the stairs at M&T, but I think she felt guilty and then decided to do a leap down some stairs and injured herself. So she's got a boot on the opposite foot. So hopefully she gets better. So
And I'm perfectly healthy.
There you go.
Good legs, nothing going on.
Okay. So with that, welcome. Like you guys have made it. Pitches, I started seeing pitch questions getting submitted. So if you are questioning whether we received it, just double check with me during our break for dinner. I'll quickly pull up the site and see who's are in there. If you have not yet submitted, midnight tonight, please. Granted, I'm not planning on being up at midnight, but please try to get them in tonight. Keep in mind the questions. A couple of you have asked questions. Just don't, if you have not submitted yet, don't take them too literally. Always keep in mind, like everyone else that's also submitting, right? So you can't control what everyone else also submitted. And a couple of us that you've seen in the room are going to be grading. So we'll have results for you guys next week. I'm actually going to start with you guys. And Rachel is joining me today. Rachel is one of the relationship managers on my team. She supports our Harrisburg market too. So she's going to be covering a part of today's segment. But before I get into today's agenda, I want to hear from all of you. So tell me a little bit about, and I think we might need mics because there's people, right? Tell me a little bit about what you've been learning over the last 2 weeks. Or what stood out, let me just say that. What has stood out? This is not a trick question. I hope you learned something. Knowing your audience, okay? Thank you. Yep, and I'll repeat if someone doesn't have a mic. Go ahead.
Just making sure that you have the correct team, like the lawyers, the accountant, the bookkeeping, and just making sure like that core team is there.
Yeah, I love that. That was a great panel.
That's exactly what I was going to say.
Okay, yeah, perfect. Frankie?
building relationships, especially with your business banker, and you never know who they could network you to. So, yeah.
Yep. Because your network is your
Network.
Thank you. Yep.
3 points that I took from last week. Some losses prepare you for a bigger win. You don't want every customer, and make sure you invest in your business.
Yes. Yes. I love that. We're going to get into a little bit about that today.
Okay, he didn't have to take part of my, answer. But just the overall structure of a business from start to finish.
Yeah. Okay. Good. Good. So you guys are taking some stuff away. I think there's been some great panels. Appreciate all the feedback from all of you. So a large part of what we're trying to accomplish, of course, is that you guys also have an opportunity to connect with community partners, right? So hopefully you've seen some familiar faces. If you haven't, hopefully you've introduced yourself to some of the community partners that have attended. And the entire idea is that we're building part of that network for you. So that way it's not just the people in the room, but you are more connected to the community. So today what we're going to speak through is financial statements. If you will remember week 2, you guys would have spoken about business planning, and the very last section of business planning that anyone would expect if you were submitting a business plan is your financial statements. I promise not to bore you all with intricacies of profit and loss statements and cash flows, but it is important that you understand a little bit of the basics. Some of you in your journey are going to be at the front end of that. Some of you, this will be a bit of a refresher. But again, touching on that, we're going to look at it from the lens of what you should include, and also look at it from the lens of what's important for an investor or a financial institution. And then how that ties in from a lending standpoint and a capital standpoint. We'll talk about some personal and business credit scores, so how that's viewed from a capital basis standpoint. And then after dinner, we'll have a panel tonight with a couple of our community partners who also support capital needs and access to capital. So depending on where you are in your financial journey, they will be able to assist you with helping grow your business and would partner with a bank many times. So want to give you a multitude of options. What Rachel and I are going to cover is going to be very specific to conventional banking, meaning any bank or credit union that you would walk into. And then after the fact, everyone else will speak about what each of their respective other resources are for capital needs, whether it's grants or the SBA, et cetera. Sound good? Okay, I don't want to bore you. We're going to interact and ask questions. Financials, to me, I look at them all the time, so they're second nature to me. There are no such thing as dumb questions, so please feel free to ask. And then we'll see what we can address with you. But if it's something a little bit more specific to your business, come and catch one of us at any point, okay? All right, so workshop goals, talked about this today, just recognizing a couple of the financial statements that are important. 3 key financial statements. Does anyone know what financial statements are pretty key? Shout them out. Okay, profit and loss, your profit and loss statement. Your balance sheet, that's what we're going to talk about. And then we're also going to talk about very high level, just cash flow, a little bit of like a statement of cash flows, which we won't get into the weeds with today, but we'll just cover it a little bit, okay? All right, so first up, Rach, so the importance of financial statements, right? So when you think about financial statements, why do you guys think they're important for you? Right, so understanding how cash is flowing in, how cash is flowing out, right? And really being able to have a snapshot of the performance of your business and the efficiency of your business, right? So how do you track how you're doing business-wise? How do you track the commitment you're putting in, the goodwill, the time, the energy, the talent, if you're not looking at your financial statements, right? So it's one metric to measure how you're doing in business, right? So when you think about the importance to you in particular, go ahead and switch that, Range. When you think about what a story financial statements tell for you, it gives you a little bit of a perspective when you think past, present, and future, right? Is your business competitive, right? How are you doing business-wise? Are you growing, right? So you should, it gives, as you're looking at different periods of financial statements, have you made more money or more revenue? Is that what you expected? And realistically, or did you make a loss realistically, right? So there's an element of this that's important. Presently, where are you spending your time? Recognizing if you're spending too much time in one area versus another, and gives you a nice picture of whether you need to switch that up. And from a future standpoint, do you start noticing trends? So if you're in a startup phase, you're obviously looking at projections. You're guessing, you're projecting a bit of what this is going to look like. If you're in a startup phase, your financial statements will tell you, ooh, were your projections spot on? And if not, why not? If they are spot on, well, you've got a pretty good grasp of what your competition is doing and how you're managing yourself. On the other hand, if you're a little bit more established, you're going to start to notice trends, right? Did you sell more, but you made less profit? Did you sell less, but you made more profit? All of those things are important key drivers for you to understand how to move forward and make strategic decisions as a business owner on how to make that next step plan for that next period. What financial statements do for everybody else? So when you think investors and you think banks alike, we're looking at it from the lens of, do you understand your business, right? We don't expect that you're not going to have ups and downs and that there's not going to be some inconsistency, but we're looking to see if you understand what the market is saying. So if you anticipated, you know what, based on the year and economics this year, I think I'm going to have more expenses. I'm probably going to make a loss, but I feel good going into next year. And that plays out. That is a big indicator for us that you have a good feel of your business and gives us some it really, really speaks to your character and in you understanding your business, right? As an investor, it's having them understand, well, do you have, it's for an investor to know, do you have the cash to support your business currently? How do we lean in and offer advice to you? So part of our role on the banking end is not just to give you loans, right? From a relationship management perspective, and a couple of you talked about relationship management, from that standpoint, it's also understanding, hey, you said you want your business to grow. You'd like to get 3 more vehicles next year. Let's talk about what you need to do to get yourself there. So that way you have the cash flow, you've got the capacity for us to be able to help you. Does that mean you pull it out of your cash reserves? Does that mean we give you a loan? But there's different ways for us to look at that. And for many of us in the room that work at the bank and some of the partners in the bank of the room, that is part of our role, is helping sit with you side by side strategically and making sure that we can help you grow your business based on where you want to go, right? So many times we're going to ask for, where do you want to be 5 years from now? Where do you want to be 6 months from now? That's a very different strategy for us to talk about, but it's just as important and for you all as business owners to have that perspective. Sound good? Okay, so diving right into financials, I touched on this briefly. We're going to be touching on balance sheets first, profit and loss statement. Again, we'll breeze over cash flow statements. Rachel's going to cover some of that. And then tax returns, we're obviously not going to cover tax returns, but have that up here just from the lens of clearly that's a government-based requirement. And the importance of that, while it does give you perspective and a lens on your financials, the relevance there is also to be maintained for auditing purposes, right? So we won't get into that today, but you guys know from the previous panels that, bookkeepers and CPAs would be there to assist you with that. So let's dive right into balance sheet. Does anybody know, let's think about, when you think about a balance sheet, what time period does a balance sheet represent as far as your business is concerned? So does it represent 3 months typically? Does it represent a year's worth? Does anybody know what a balance sheet covers period-wise? Nope. T3? So a balance sheet is a representative of a moment in time. So your balance sheet today is only as good as today. The second you leave today, your balance sheet tomorrow looks different. because of any transactions and things that would happen. So your balance sheet is not necessarily periodic. It is considered a moment in time. Most places are looking at a balance sheet from the lens of December 31st, right? What does it look like at year end? But December 31st and what it looked like on December 1st are two completely different things, just based on what's coming in and coming out. So just know that from that lens. Typically, I want to make sure I'm on time. Typically, your balance sheet lists assets and liabilities, right? So your assets being things that add value to your business, and that's split up in two different ways. Short term, anything that adds value within, and is collectible in a short term within a year, and then your fixed assets. So when you think about buildings, vehicles, things like that, and then of course liabilities. So anything that is a debt to you. Your balance sheet also will show you shareholders' equity, or the equity that you leave in the business. So at the end of the year, when you make a profit and you decide, I'm going to take money out or I'm going to leave it in, what you leave in your business is the equity that you have in your business. And that equity is used for multiple things. So balance sheet, just a snapshot, moment of time. What it tells us from a financial institution standpoint is just how strong is the business? What do you have that's of value, and what do you have in debt? Okay. The balance sheet, as its name implies, has to balance, right? So the equation for that, and again, this is not a math class, but just so you understand, the equation for that is typically assets are always equal to liabilities plus equity. Okay. So again, if you're looking at QuickBooks, you'll always notice that your asset number is always equal to your liabilities plus your owner's equity. And then just breaking each of those down, I talked a little bit about what assets are. So current and fixed assets, your current liabilities and long-term liabilities, and then of course owner's equity. I'll flip here, and again, we're not going to spend too much time on understanding the equation, but just for an example standpoint, a couple of current assets that you can have. The main one is liquidity, right? So your cash position. Any cash that you would keep in the bank is your liquidity. That's a current asset. You have availability to that immediately if you need it. Other types of assets are accounts receivable, right? So if you're in a business where you don't get paid immediately and you have to bill someone and you're collecting payment in 30 days, 60 days, 90 days, those are accounts receivable, and that's an asset. There's value to that, right? Now, when you think about it from a capital standpoint, typically you need to capitalize that, right? Think about if you're a business owner and you have a business, so if you're a landscaper and you have to put pavers in, you've purchased the pavers ahead of time, you've already footed that bill most of the time, right? Or let's just assume you foot it up front. On the other hand, your clients are not necessarily paying you up front for the job to lay the pavers. Typically, they're like, we'll pay you, they're going to pay you, maybe it's 20% up front, and when you're done with the job, they'll pay you the rest. But in between that time, if it takes you 3 months to do the job, whatever that time is, you have to pay labor, right? You've got other bills you have to pay. You've got vehicle cost expenses if you're driving around. So when you think about capital and how you manage your expenses and your cash flow, understanding that is extremely important. And as a banker and any financial partners you would have, that's a critical component as we talk about things, right? Understanding what assets you have that you have availability to today, and what assets you have that you still have availability to within 12 months, but you might need another vehicle to help you funnel some of the expenses in the interim, okay? Liabilities, of course, being the same way. So if you have loans out there, understanding what those loans are. If you're paying a mortgage, right, that's a liability that's on your books, that's important. And then of course we talked a bit about owner's equity, either your investment into the business, or if someone else has, or if you've left gross profits in there, or if someone else has added anything. What you have in front of you, Rachel should have handed out. We actually gave you an example. Up on the board here is just a quick example of just a balancing of what a typical balance sheet would look like. But we thought we would give you a real live example. So in front of you, you've got examples of two different actual current M&T Bank customers. One of them, you'll notice, let's pull up, and I just want you guys to quickly look at this. Profit and loss is on the top for each of them, but if you turn to the second page, there's a balance sheet. You'll notice one business does about $124,000 a year, and the other business does about $2 million a year, right? But if you take a look at the balance sheet, let's do the one business, it's a balance sheet that at the top it says as of May 12th, 2025. Everyone have that? And if you take a look at that, just take a second to look at it and let me ask someone to guess what type of a business this is.
They might not know until we get to the profit and loss.
Hmm?
They might not know until we get to the profit and loss.
Can you tell based on what you're looking at what type of business it is?
Manufacturing or automotive services or services?
Nope.
Landscaping, snow removal?
Nope. The smaller one? No? And I'm going to let you hold on that. So my whole point of that is you can't necessarily always tell just on the balance sheet, but as we get into the profit and loss, we'll let you know what type of a business it is there because you'll be able to see a little bit more detail on the profit and loss based on what they're doing. But just keep that in mind. Looking at this though, I mean, you see this business has, in total, as of May 12th, so as of that day, total bank accounts has about $71,000. They've got some fixed assets in, machinery and equipment. So that's all they've got. You don't know what type though. You don't know what that means. And then, of course, in their liabilities, they've got a Chase Business credit card, and then they've got some expenses in there for IRAs, et cetera. So this is just an example of one balance sheet, if you haven't seen one already, but just giving you some perspective there. The profit and loss tells you a very different story. Take a look at the other balance sheet for the larger company. What do you notice as maybe a big difference? Yeah, they have a lot more liabilities, right? Their liabilities are itemized here, and all of their liabilities look like what? Cars, vehicles, equipment, right? So if you're thinking about like this backhoes, Dodge Rams, you're leaning more here toward, wow, these guys are very capital extensive, right? A lot going on here on their balance sheet. They've also got a lot of shareholder distributions at the bottom. So they're distributing money to owners in the company. There's probably multiple owners in this company. So again, balance sheet, moment in time, paints a picture for you. But depending on your type of business, it can be a complex balance sheet, or it doesn't have to be a complex balance sheet. Just wanted to give you some realistic examples of like what we see on a day-to-day basis here. Any questions specific to balance sheets? Okay. I'll just touch on working capital quickly. Working capital is the funding that your business needs to really operate on a day-to-day basis, right? So many times if you're looking for a funding need, again, I gave you the example of the landscaper. On a day-to-day basis, like what does that landscaper need to be able to keep business running? So what does that look like? And typically the way to calculate that, and the way we do at the bank for the most part, is looking at current assets and subtracting current liabilities. That's not something that you ever typically need to calculate, but that's a good indicator for us if you were to show up and say, hey, I really need a $500,000 line of credit. If you were a pizza shop and came to the bank and said, I need a $500,000 line of credit, would that make sense? No, it wouldn't make sense, right? Because chances are the amount of time you've had to pay for your food, when everyone walks in to get a pizza, they're paying up front. You're not waiting for them to collect payment. 500,000 would be a red flag to me. I'd say, let's talk about that. What are you using that money for? Well, I'm getting a new pizza oven. Okay, that's not a day-to-day liquid need for working capital. That's a term loan, right? So understanding the different reasons to use different types of financing are important. Working capital for us, which typically ties to lines of credits, is managing your day-to-day cash flow and how money flows in and out and what you need to be stable. Make sense? So many times if we're asking questions around, tell us how you're paid, tell us how money flows in, tell us how money flows out, help us understand when your customers pay you, when you're paying your bills, that's us trying to answer the question for working capital. So we have a good understanding of what type of vehicles you need in order to help continue to support your business. Sound good? Okay. Are we good with balance sheets and what they represent and what they're for? Maybe a little louder. Are we good? Yes. Okay. I'm going to pass it off to Rachel. Rachel's going to talk about profit and loss statements. We're right on time.
Sounds good.
I'm going to sit here because it's complicated for me to move.
Just sit there. So we're going to flip over to profit and losses. Profit and losses for business owners, I will say it provides more of a story as far as how the business is bringing in income, things that they're having to pay for. It tells you at the end of the day, how much money are you making, which we are all in business to make money, right? So, I hope so. So the profit and loss financial statement that reports the company's financial performance over a specific span of time. So whether we're looking at your 2024 profit and loss or your 2025 profit and loss through May 12th, whatever it may be, that's going to tell you the entire time frame instead of just a snapshot of one day. As it says here, it's also called an income statement or an earnings statement. It's going to show you your revenue, your sales, your income coming in, whatever type of business you are, whether you're bringing in revenues or you're bringing in tithes if you're a church, or whatever type of money that you're bringing in, that's the title for the income coming in. You have cost of goods sold potentially, so the cost of producing your product or selling something, that's going to be in there. Your total gross profit, so everything that you make before expenses come out, it's important to know. Any overhead costs you have, expenses, and then your net profit, so what you make at the end of the day after that. There's lots of ways to track your P&L through profit centers, through QuickBooks. There's all sorts of resources out there. So we have a sample here, but we also, again, brought 2 live examples of profit and losses because, as we said, it's so much better to see something live, to see different categories, especially of expenses. So if you look back at the handouts that you were given, we go back to the front page of those. And let's go back to that smaller company that shows through May 12th, they had income of $124,752. When we go through that, you can see several different expenses, fees, things like that. Anyone have a new guess of what this company might be, just seeing the different categories of expenses listed here? Bookkeeping? Nope.
Getting closer, because originally...
Getting closer.
A couple of people had said originally manufacturing.
Nope. So this is a chiropractor. So his income coming in, he's got billing company expenses. So quite often, they have to do a lot of billing. So doctors, chiropractors, dentists, insurance company, they're doing billings to the insurance companies, and that's how they're bringing their money in. So on their balance sheet, they're going to have a good number of accounts receivable because of waiting for insurance companies to pay them. They also have listed down here their rent expense, everything for their credit card processing fees, and then they have their net income of $70,847 listed there. It's important when you're looking at a profit and loss that when the bank views it, a lot of people when they're looking at starting a business or maybe they're buying a business, they say, oh, well, this business is worth so much money. I'm not going to need this expense or I'm not going to have this. It's important to understand how that business operates to know truly what you're making at the end of the day. Because if you're not going to make money, then how are you going to survive? Okay? How are you going to support yourself and support the business growth going forward? So always remember when looking at this, these expenses are important. You want to track everything for the expenses so you truly know how much income your business is making. So let's look at the other sample here that has the income, the $2,153,940 through April 25th. And if we go through here now, anyone have any guesses of what this company might be? Construction? Yes. So this is a paving company. Okay, so again, they have heavy accounts receivable because they're constantly billing out. And from, a bank's perspective and a bank lens, that's important for us to know because they're quite often not getting paid for 90 days or longer. And imagine as a business owner how that's going to impact you when you're not getting paid for 90 days or longer and you've got over $1 million that you're waiting on to come in. That really hurts your cash flow. And you need a bank's support with that, but you got to understand the story and help explain that through your financial statements. So this one has several similar things as far as expenses. A few different ones is their interest expense, so all the interest that they've paid on their loans throughout the year. They've got a heavy insurance expense, obviously because of their employees and needing to have liability insurance. Anything stand out on either of these financials as expenses that you are surprised to see or wouldn't have expected? The net income surprises you? Why is that?
Well, I would assume that the owners are paying themselves out as least employees.
Mm-hmm. Yeah. It surprises us too. So obviously, as a bank, we want to see businesses doing well, having strong net income. This is where your financial statements are so important. It's why your relationship with your CPA, your accountant, is so important. There are two ways that you can focus on when it comes to your financials. You can either focus on growth or you can focus on lowering your tax liability. If your focus is on lowering your tax liability, you're going to list every single expense possible on this, even ones that may not have truly been exactly there, and that's what your account is focused on. But on the opposite side, if you're focused on growth, then you're not going to try to expense everything that you possibly can because the bank needs to see that net income so that we can help lend to you. Does that make sense? We need to see income, positive income, to support that debt.
Maybe a good thing to chime in on. If you're in a startup position, right? So I know Tony's in the back of the room. He did the business planning segment. In a startup position, clearly you don't have previous financials, right? And we're looking at projections. If you project, then many times we'll do loans for startups, and we typically look at an SBA, and I know Melissa's here, so she'll speak to a little bit about that later. But if you're projecting that year one, you're suddenly going to make $2 million, we're going to question you. So there's an element of realism that comes into play here. And I think it's important to note here, to Rachel's point, understanding your financials, like understanding your expenses and understanding true income. If you know your customer acquisition, or if you're in a service business, you're not going to actually get paid by that first customer for 5 months and you're a startup, don't show income for 5 months, right? That's okay. It's the businesses that tell us they're suddenly going to make a ton of money, but there's no real story that makes us ask you more questions, right? Because we're then asking if you've really thought through the month by month process. What is your upfront expense? Typically, you heard Jamie last week, the 3 things he said: understanding your startup costs, right? So it was his first one. Understanding your break-even point is critical. How long is it going to take you to get break-even day one? It might be 9 months. It might be 18 months. Understanding that, though, is pretty critical. And then, of course, how you're going to grow, like what your profits are going to look like. So again, paint a pretty real story. So when you're putting together a business plan, whether it is for Finanta or for a CDFI or for an EDC or for the bank, whoever it's for, you want to make sure that in that business plan, your financial segment is truly representative of the type of business that you are, and you can tell that story, okay? Don't be fearful of having negative net income year one. Many times we expect that if you're a startup. If you've been doing well and then you suddenly have negative net income, then of course you need to tell us the story. Make sense?
And I'll add, use your resources with that. Use your business banker. Use the local economic resources, the chamber, assets, et cetera. We will help you with your projections. We will help you with understanding how to compare them to other industries, knowing what is a normal profit margin that you should be looking at. We will help you and support you with that. That's what we're here for. Any questions on the profit and loss section?
I just have like a general question, kind of what based off of piggybacking off of what she just said. If you do come to the bank, let's say a year later, and you are maybe looking for more money to grow your business, but you might have been in the negatives the year prior, does that necessarily count against you? Because I know you said you still work with it, but if I'm asking for more funding, maybe to invest in marketing or other things that may help me, so I'm not in the negatives the next year, but I'm in the negative this year, will that be like a detriment to me receiving more funding?
So it's going to depend on the. Yes. Yes. So the question was, if I have negative net income after a year in business and I come to the bank because I need more funds and resources to help grow, is that going to be a detriment? Is that going to hurt me in getting lending? I will say banks and various resources, we are looking at the story. We're not just looking at 1 year and saying that's it. So we're going to look at the story of your history, and we're going to look at the future if there's projections, and we're going to find resources, whether it's the SBA to support us, or maybe it can't work with the bank and we're working with Finanta or assets. They're going to help support that when we're not able to potentially. But it's not, 1 year's not going to kill you. We look at the whole story.
Yeah, one thing we definitely focus on as well is just your cash flow. Typically, most institutions, when we look to lend money, are looking at for every dollar of loan that you have, like in debt that you have, we want you to typically have $1.20 in income, right? When we want that extra 20 cents, some entities maybe are 25 cents, 30, just depending on the type of business you are. But we want that extra to cover any last minute expenses that come up, right? You need a new roof suddenly or something like that. That being said, that negative net income, many times we can add back things to cash flow. So if you're like, you know what, I invested $50,000 of my own money into this, and many times we can go back and say, oh, look, well, you added this in technically, or, do you know what I mean? Like if you've put in money, we can take a look at that. There's many different ways for us to view that. So it doesn't, just because it looks negative to you, it might not necessarily be negative to us, just based on what you have going on. We typically add back interest that you pay. We don't nick you for like depreciation on things. So we will actually add back some stuff, and we'll go through that with you. Jen?
when I talk about there's your tax return, and like Rachel said, you try to deduct everything you possibly can to pay less in taxes, but some of that aren't real expenses. Like you didn't really throw money away with depreciation. So we throw those not like money back in. So that's how I kind of relate it to my customers is, was this a true expense or was it just a deduction? Did you really put this money out? Or was it just a tax write-off? So think about those things, and that kind of puts it in perspective for most of my customers when I explain it that way. So that's all.
Any other questions on profit and loss or what we were just talking about? All right. So as we mentioned earlier, there is another statement called the cash flow statement. We're not going to go into detail on this. This is something that your CPA would prepare for you. Typically, it's with bigger companies, so something that you could speak to your accountant about. So we want to go into now common financial problems. Whether you're a startup, whether you've been in business a couple of years, there are many issues or problems that can come up that can prevent you or hurt you when you're trying to grow, when you're trying to get financing, when you're trying to buy another business, bring in someone else. There's many problems you can face. So we have a couple of them listed here. Limited capital, you have minimal record keeping. That's probably one of the number one things I hear, especially with startups or with businesses that are smaller is, oh, well, I don't track my profit and loss. I don't use QuickBooks. I just jot it down, on a piece of paper and I give everything to my CPA at the end of the year. That can be challenging for you as a business owner to understand what's truly happening with your business, and even more challenging for us as the bank to try and understand and tell your story to help you move to the next level. Another problem is failure to seek outside help. I've seen this with business owners who they don't want to ask for help. They're like, not my husband, but some husbands that don't want to ask for directions. I'm probably one who won't ask for directions, and my husband will. But not asking for help, not asking for support or guidance, we are all here for that, and we are asking you to ask us for help so that we can help you be successful. Poor management, I've seen that with business owners who go into business with family members, their best friend, or someone that they think it's going to be a great partnership. They don't work well together, they're not managing well together, and I see some nods that it becomes a challenge. So when you go into business, you have to be careful because this is your baby. This is your future. Treat it like it is your child and you want to see it thrive and move up. Last two, reluctance to invest in the business. Some people feel that, well, why should I personally support this? Why should I personally guarantee this? Why do I need to invest in it myself? You are the business. Whether your business will survive, it lives and dies with you, okay? And then we already mentioned failure to personally guarantee the loan repayment. Any others that you want to add to that?
No, just around personally investing in, putting your own equity. We do like to see that you've put your own sweat equity into the business, right? So, that you believe in it enough to put a little bit in, which is why you see many times very few institutions will ever loan you 100% of what you need. That's the reason, right? So there's an element of one, hedging some risk, but also making sure that you're also willing to put in a little bit of your own to hedge that risk as well, right? And many times people do that personally, or they get an outside investor to come in and do that piece. It doesn't matter how you do it, but typically very few people will look at doing 100%, one, for us to hedge our risk, and two, to make sure that you're invested just as much as we are, okay?
So we don't want to beat a dead horse, but where do you go for this information? I know this was mentioned in previous weeks, but whether it's your accounting software, your CPA, your bank statements, tax returns, I strongly encourage everyone to become best friends with your CPA. They are the person who's really going to help you because they can give you guidance, help you stay on track, but all of these resources, as well as everyone in the room here, can help you with this information. So the last thing we want to touch on today is credit. We do have a panel this evening that will be on the second half after dinner that we are talking about accessing credit and accessing capital. So we have some subject matter experts in the room that will speak to this, but we also want to just briefly touch on your personal credit score, your business credit score, and how this can impact you and potentially hurt you when it comes to finding financing through a bank, through another source. So when it comes to your personal credit, it's a very ambiguous number. There's a lot of confusion around it. There are 3 credit bureaus that report. Does anyone know how many times you can request a free credit report from each of the bureaus? Once a year. And can you get it from all 3 or just one? All 3, okay. This does not tell you your credit score, but it does tell you what is on your credit report. And that is important because if you're using Credit Karma, if you're using, your Capital One credit card to tell you your credit score, that is not your true credit score. That is an idea of what your credit score might be, but your credit score is most likely lower than that. And you need to know if your credit is being impacted by things on your credit report that could be hurting you. So there's several things listed here between payment history, credit utilization, age of credit, your mix of credit and credit inquiries, and how they can impact your credit. Sometimes the fact that you don't have credit or you have minimal credit can be one of the biggest detriments to you. So as bankers, we definitely encourage you to try to use your credit wisely and understand that the things you do, if you choose to co-sign on someone else's loan and they don't pay it, those things impact your credit and they drop them. There are minimum thresholds that are required from the SBA in order to lend, with the banks in order to lend. It's a little bit different with every bank, so I'm going to recommend you talk to that respective bank. But the SBA is pretty standard as far as their minimum thresholds. But it's really important that you understand that if you don't have enough credit cards, or you have too many credit cards, you don't have enough term debt, you're not paying on things long enough, you've only had a credit account open for 2 years, and these things can help impact your personal credit score. On the flip side, there's also something called your business credit score. This is even worse to try to explain than your personal credit because there is no way to even find out what your business score is until you apply for something in the business name. Your business credit score is called an SBSS score. So if you hear someone talking about your business SBSS, that's what they're referring to. And when you're starting up, that is going to be made of a culmination of things. It's impacted by the industry that you're in, whether it's considered riskier or not. It's impacted by your personal credit, and it's impacted by how long you're in business. There's a couple other things that go into it, but those are the main 3 things. So if you unfortunately have poor personal credit, that's going to be the biggest thing that will hurt you on the business side because you are struggling and the business automatically, that's going to pull that score down, okay? There are times that we will, if you do not pass thresholds for traditional lending on the business side, we will use SBA to support that, but there are still times that it's not even at that threshold, and unfortunately our hands are tied. So I don't want to go into too much with that because credit score is a lot. I'm always happy to answer questions one-off if you have any, but Nat, anything you want to share with that?
Yeah, I just add, if your business hasn't been in existence for a long time, so typically if you've had a long-term business, we've got historical data to see how you run your business, right? And many times we're relying on the business itself to support the business. If you're in maybe that 1 to 2 year startup phase, you are the business, right? Like the business doesn't have enough of a history at that point to have generated enough of its own like standalone credit. So we do look more at your personal credit score if you're in a bit of a startup phase, right? So again, I think some best practices, pull pull a credit report from each bureau once a quarter. I do that mostly just to confirm fraud. I think we had someone talk about fraud earlier in the previous weeks. I do it just to make sure no one's hacked my own personal credit, right? So if anyone has any children, many people are hacking children's credit, like Social Security numbers, and using them for credit cards. You should be pulling a credit report on your children's credit, like Social Security numbers too. It's weird, but it's a thing. And there's a lot of fraud that occurs there. So, and everyone just assumes you're not going to notice until your 17-year-old goes to get a card, right? So just make sure you're doing that. Be diligent there. And then have a story. If there's something on there that's minute, many times it's something very small. You got in an argument with Verizon Fios. You demanded you were definitely not going to pay them that $50. They seemed like they vanished, but it's on your credit report as a delinquency. And it's there. I'll just share, we had a business customer who does $10 million a year on average in business, had a $50 delinquency that had been out there for 6 years that he just was like, no, I'm not, AT&T pissed me off, I'm not paying it. For that reason, he wasn't able to get loans at banks with a $10 million business because it became a character issue, right? Like, why can't you make $10 million, you can't pay $50? Why does that give us confidence that you're about to pay us back $1 million loan, right? So just knowing what's out there and understanding how that impacts your business as a business owner is critical, and making sure that you're checking your ego at the same time as you go through that, all right?
So I want to go through one last section here before we reach out and ask for any more questions, and talk through the 6 C's of credit. So this is what banks look at when I talked about the story. So we're not just looking at your profit and loss, not just looking at your balance sheet, we're looking at the story. So we have 6 things listed here. I will say the 5 C's were kind of historically, the 6th C kind of came into play within the past couple of years. So previously it was more the 5, but we've got collateral. So these are your assets that are security for the loan. So whether you own a property, whether you have accounts receivable, whether you own the vehicle that supports the loan, we're looking at, is there collateral? If the bank isn't going to get paid and there's a default, can we collect on something to protect us? Conditions, what's going on in the economy? We've got tariffs going on. I just saw something come out today about tariffs. What's happening? Is there a pandemic? Is there something happening in your industry? Are lumber prices going up? We want to look at what are the conditions in the economy. Capacity, this specifically the profit and loss. Do you have the cash flow to cover your debt at least 1.2 times? Do you have that income coming in to support it? Capital, are you investing in the company? As Nat said, do you have skin in the game? Are you invested? Are you really here for it? Are you serious about your business? Because if you are going to be in it completely. Your character, so what's your track record? What does your credit score look like? Okay, are you paying things on time? Maybe you don't have a lot of credit, but you're doing what you can with it, okay? You're paying things consistently. And then the last one on the side here is competency. What's your experience? You know, what's your history? Let's look at your resume. What have you done before? Maybe you've never started a business, but you worked in sales for 5 years, and now you're starting a company that's sales related, okay? We're gonna look at that, and that helps provide support to the bank when it comes to trying to get you financing.
Yeah, I call the competency one common sense. So many times, even if I'm looking at deals, I'm like, does this actually make sense? Was there common sense in what was going on here? And that ties in. I'd say, which do you think is the most important in the 5C segment? Just shout it out. Or which do you think banks look at the most? Collateral? No. No, so actually capacity. So if you're looking for, so capacity is your ability to be able to pay the debt, right? So typically, I mean, again, this is a capital discussion today. If you're out there looking for additional capital, we are looking for first and foremost, is your business able to support the monthly payment the last thing we want to do is put you in a position where we hand you a loan and 2 months later you can't run your business because the loan payment is too high. That makes no sense, right? So we will back into those numbers and say, oh, this monthly payment doesn't work. You won't hit your expenses. Maybe the loan, instead of being 5 years, needs to be a 10-year loan, right? To spread out those payments. So that all comes into play. Collateral, though, is a follow-up. So most banks don't lend on collateral. Just because you have a building or you have a vehicle, we're not in the business of being realtors and we're not in the business of being a car dealer, right? So we don't actually want to take your stuff. But so most of the time we're focused on your capacity. And then after that, if something were to happen, sure, there's a default play, but that's not the first thing we're looking for. So many people come and say, well, I have this big building. Why can't you give me the money? Can I borrow against the building? Yes, but you still need to be able to pay the monthly payment. Does that make sense? Yeah. Okay, so that I'd say that's the most critical one, to think about. And then we take a look again when you think, I'm tying this back to Tony's presentation around your business plan. Everything ties in here, right, to make sense. Is your management structure make sense? Does your strategic plan make sense? What's your marketing plan? If you're a doctor and you come and you tell us you're opening up a sub shop and you don't tell us, and you tell us that you're going to be the person to run the sub shop, we've got questions. Like, something doesn't make sense there. But if you tell us you're hiring someone and they have experience in fast food and they're going to run your sub shop, all right, we feel better now, right? Like, so again, that common sense competency part really comes into play, and we will ask those questions. So it's just really important that all of that adds up and all of it just paints your picture. And hopefully this makes sense as far as how it ties back to your overall business plan, and just how important it is to have a good understanding of your business overall.
All right, so to wrap up, we've stressed that your business financial documents, they're important, they're vital, and you really want to understand and know how your business is doing. And this is the only way to truly know. There's many uses for the statements, whether it's lenders, investors, or just even sharing the story with someone of the success of your business. And then we've got several different statements that can be used, and we went through that already. So I know we said a lot. We're going to do dinner in just a couple minutes. Any real quick questions that anyone had over the last couple sections with credit, with 6 C's, or anything that you would like to speak up and ask about? Corey.
We'll let those guys talk about it after.
We will let Melissa
We have the subject matter experts after dinner to talk through that for you. You have a question right here.
Does M&T have a minimal requirement of age of your business to like obtain a loan or a credit card to start building business credit?
No, so we are an SBA preferred lender, and what that means is that we have a department within M&T that has the authority to approve on behalf of the SBA directly. We don't work with a third party. So if we are not able to approve conventionally because you haven't been in business long enough, then we can utilize the SBA for support and approve it that way. So no, we don't have a minimum.
Yes, Yuri.
The first time that you pull your credit to get a business loan is when it first generates. And from there, it builds upon that.
And then it'll start, there's a behavior scoring that is tied to businesses. That is also very complex. I'm not sure even after all these years that I understand, but behavior scoring will take a look at like the trends of how you spend money for your business. So if you're a contractor and you have a Lowe's or Home Depot card, or it'll actually track trends of your business compared to industry standards, and it shows us behaviorally. It gives you a number, or gives us a number that says, kind of like your credit score. On average, if someone's behavior score number is X, that means they manage well. If it's in the middle, you might want to ask some more questions. So, and that is tracked over a 12-month period. So that changes every 12 months.
You had a question, Mike? Okay. All right. Well, we will stop here. Thank you for your attention, your questions. We are going to have dinner, and then we do have our Accessing Capital panel afterwards.
Yeah. And also, if you need me to double check that your upload for the pitch questions went through, come find me. I'm going to ramp up my laptop and I'll double check for you when you come back in. Okay?
Also, this presentation will be sent out. I know a lot of you are taking notes. This will be sent out with every other resource throughout this lab.
Where's dinner being served?
Out where the food is. Yeah. I don't know.
Oh, all right. Let me give me a let me give it to my laptop, and then I'll open up the site and just see. Yes, go do that so I can get my crutches and get over there. I'm not going up there to say hello to them. You did a nice job.
So did you.
I don't know if it made sense, but it's kind of like.
Did it make sense?
In the 7 weeks.
Nothing made sense.
Yeah.
So I'm in your business, like 2 years, and I haven't gone to M&T. Obviously, maybe this is, where I need to start, but I've tried, getting, business cards from our bank, and everyone I've talked to, at least 5 different places, even, Capital One, the bigger ones, said you had to be in business for 2 years, 2 years and provide 2 years of tax.
Okay. Yeah, so let me.
So we're stuck at this point.
Yeah. So it's a bit of a catch-22, right? So I think when you look at a bank like a Bank of America, Cap One, they're so large that their overarching business plan, like the big three, right? Their goal is not to necessarily work with the smallest of smallest businesses, right? So you think Chase's goal is to give credit cards to everybody, right? But Chase requires, but they're like, we'll do it, but they don't have, are you going to walk into a Bank of America down the street here? No. But there's a reason for that. They decide that they are not going to have branches and stuff like that because they want to focus on, it's very score-based. And the way they score-base you is they need tax returns, right? As you kind of get smaller down the funnel, our stance as a community bank, and I'd say a couple of the other community banks, are, well, if you've got your deposits, if your business is open, your business has to be open. We won't give you if you haven't banked with us, we won't give you a credit card day one, but we will by the time you hit month 3. Because our perspective is in that 3-month time frame, we've got a good understanding of how you're managing your business, how it's running. Are you overdrafting your account every day? Are you not? You know what I mean? And so, but we take the stance as a community bank to actually we are a commercial bank. We're not an investment bank. So as a commercial bank, business is our primary goal, right? So we tend to be a little bit more. We tend to be a little bit more small business friendly, but we're probably not necessarily as residential friendly because that's not our thing, right? That's not our thing. So every bank has their own thing. But if you go to a Members First or one of the other credit unions, they're very residential focused, right? So if you want to go get a home equity loan, well, they're going to give you less hassle then we will even do that, right? Because we're going to have other requirements because we're bigger and we have other regulatory requirements. So I think a lot of it is more just the type of financial institution you're going to and what they need. If they're looking at you just as a number, then they need data to be able to determine whether it's a risk game, right? So if your credit score is 750 and you make X amount of dollars and you bring in X amount of net income, yes, we'll give you a credit card. If you're not that, we're definitely, it's a no right off the bat. We're a little bit more flexible. We're well,
I didn't realize going into it, we had, I had to actually do intense research on my bank, for the business because I was oh, a credit union.
And listen, and there's nothing. Listen, I'd say there's nothing wrong with a credit union, right? And I there's enough business for all of us, so there's nothing wrong with a credit union. But what I tell a lot of customers is, a credit union is going to give you vanilla. I'm going to use ice cream. A credit union is going to give you vanilla. And as a startup business, many times vanilla is okay. And then as your business grows and the complexity of your business grows, sometimes you need vanilla with sprinkles, with cherries on top.
Yeah.
Maybe you need Rocky Road.
Yeah.
That is not their capacity. That's
Okay.
not what they're built for, right?
Yeah.
So they're built for, let me help the little guy. But then you hit a point, they've also got caps on how much they can lend to you. So then you hit a point where they're like, they can't get complex, right? We sit in a very, I'll speak just to M&T.
Yeah.
Like, we're the number 10 bank. So, like, large, likewise. But we can be vanilla. Or if you need us to build out your own purchasing card program, we can literally build a custom program for your business. So we can span the startup business to the $50 million
Is it hard to
business,
change
right?
your banking, your business banking? Like, is it something that you have to like do?
No. So I think most people
Is
do it
it
over
very
like
transitional?
most people
Like
do it over a 3-month period, right?
Okay.
Because the idea is like if you're in business, you're already like you've got people who are either depositing money,
Right.
you've got auto debits.
Yeah.
So what you want to do is like open an account, get your checks, get your debit card, get everything you need, set up your web banking, and then slowly you start telling people, hey, I want you to start depositing money here.
Okay.
Slowly, you start making payments out of here. So over a 3-month time frame, you fully transition. It will never, if you're a business that is fully running already and you've got payments and you're making payments, it's not going to happen overnight. It's going to be a 3-month phase.
That's
You're going to
good to
phase
know.
out, and then you're going to want to keep that account open for any last minute, like most people forget like they have their taxes already deducted, right? Or like payroll tax, and they're like, oh crap. Like, so stuff like that, you want to
quarterly
keep it
things that
open.
come out.
Yeah, so, you almost want to make a list of, let me pay attention for a month, and many times we'll say, give us 3 months worth of bank statements, and we'll go through and be like, okay, don't forget, you've got to call these 8 vendors, and don't forget, you've got to, so we'll kind of help through that, but we don't, it's not an overnight thing, it's a
Good to know.
3-month phase out.
Okay, thank you.
Okay.
I really appreciate
You're welcome.
it.
You're welcome. Tony, what's going on? All right, I'm going. I know, I got caught up. How's it going, friend? Broken, emotionally, mentally, and physically. Let me go get my laptop up.
I'm just gonna steal a charger. No, I'm just charging my phone. least for the next year. Was the message? We're good for at least the next year.
Don't worry about it.
It's just gonna be like what?
I think it's going to be back and forth. Luckily for us, I think we're well capitalized. We're not going to see anything. We have our total government funding is like 10%. So we're fine, but a lot of the smaller may not be.
That's what I was gonna say. Like, I mean, which
I only said in the comments, like wondered why Jamie has never like started to look for outside investors. I mean, assets compared to financial.
Jamie Arroyo? Oh, yeah, absolutely. Oh, yeah, he's going for right now.
I mean, you got 86 or 82% of the
Yeah, it's a conversation that we started having.
So is Lindsay High still there?
Yeah, yeah. Yeah, she does, I think she does programming.
Oh, I thought she was in business development.
Oh, no, she does the business development. Lisa Weaver does the programming stuff. And then Denzel, obviously, does her. Denzel said he's doing pretty busy too. They're, kind of tapping more into the youth market too, so I know, Roger and stuff.
That's good.
Have you seen Leland?
That helps.
I'm gonna be honest with you, like, it's just a fairly decent market because, I mean, look at me, I just been there I dropped there May. I don't know maybe got some. Yeah, I know.
I need to close the lot. Cream of the crop. Getting I've already weeded through the ones that you guys didn't see.
Use your name MTB at HU. And the password is MTB at HU.
Gail just got jealous. I know. Gail got jealous and drove off the stairs.
If you guys switch sides, you can just walk together.
I know.
We still have one person out here.
Oh, apparently it looks a lot better.
Okay, welcome back. You can move in and out. We're gonna go ahead and get started with our second half of the evening. So first of all, what a great way to start out this particular session. I think Natalie and Rachel did a great job, and so let's just give them a big round of applause because I think they did a great job. Thank you, guys. And so we've got a great panel. And so I just want you all to know that, listen, we know that securing funding as a small business, especially with limited credit, no collateral, or you're just starting out, it can all be very, very overwhelming. But we've brought together this wonderful panel. Unfortunately, we don't have Leland with us tonight. We're not exactly sure what his status is. I don't know if he went to the other building and just said, never mind, I don't know where I'm going. So he's not here, but that's okay. We've got Melissa, and she's going to be just wonderful as well. So this panel represents a myriad of opportunities for all of you as small business owners or startups. And so I just want to go ahead. I've shared each of the bios for each of these individuals along with their contact information. Some of it I think is relatively good. The other stuff I just got by stalking them on social media. So if their contact information is there. Please, if you have direct questions after tonight, you can feel free to reach out to them. I'm sure that they'll all be open to that. So tonight with us, we have Jason Graves. He is coming to us from the city of Harrisburg. Tony Maggio, as most of you recognize, Tony was one of our first presenters from Finanta, formerly known as Community First Fund. Yesenia Rios is with, did I say your name right? Okay. She is technically with Finanta, but she's also on the assets board. So Jamie was here and did a wonderful pitch, how to prepare an effective pitch last week. And so this is his boss, because she's on the assets board. Denzel Brown, who works at assets, and I should probably get his contact information out to everybody as well, but he couldn't be with us. So Yesenia was nice enough to come in and stand in his place, because he said she knows everything. And then Melissa Stone is with us from the Harrisburg Chamber Capital Region Economic Development Corporation, also known as CREDIC. And so she'll be a wonderful subject matter expert. So I did put the microphone right beside you. We'll just toss it down the line. So let's get started. And this is a question that I have for each of the panelists. In each of your respective institutions, what conventional or unconventional capital or credit solutions do you offer for startups or small businesses who might not qualify because of their new business status or lack of collateral?
I can start. So, go ahead. Good afternoon and good evening, everyone. I'm glad everyone could make it. I'm excited to be here. So here at Finanta, we offer all the same programs that M&T does, your major banks do. However, as they are heavily regulated by the federal government, we are not. So what I like to say is their boxes are squares, ours are kind of rounded. But we offer startup capital programs for working capital as little as $2,500. Up to loans for real estate and up to $3 million. But for the new entrepreneurs, we really work closely with you with your business plan and your projections, because that's what we're going to be basing our approval status on. So we tend to spend a lot of time on your projections and your business plan in order to help you with that startup working capital. So we're in that range. Typically for a new business, $25,000 to $50,000 is usually the max that we're looking, especially if we're doing unsecured without any collateral, but as little as $2,500.
And at assets, we start from the beginning of an idea. So we have workshops that you can attend. We provide more of the technical assistance, credit solutions. Just you can connect with Denzel, who's the lender, and he's able to assist you with the business plan and projections and provide the references of resources as well. We do the smaller dollar loans, so 500, and then we have up to 2,500 as well, and then 10,000. So number of different products in the lower tier startup entrepreneurship.
So when it comes to unconventional, economic development lending is, in its essence, unconventional. It's not conventional. Economic development lending, I'll be very frank, is not great for startup businesses, but it can be very good for small business. So what's the purpose of an economic development loan? Well, first of all, it doesn't work by itself. Like if you come to a CREDIC or a York County Economic Alliance or a Lancaster EDC, most of our programs don't just give you the money alone, like Finanta and Assets might, which, by the way, are fantastic programs. We refer to them all the time. But our programs are designed to take your private investment, whether it be a little bit from M&T, a little bit of your personal investment, and make sure that it can make a better and bigger economic impact. It is designed to help it stretch a little bit farther. So the one program that we have used for startups, and we have used for small business specifically, and we've used most importantly for permanent working capital loans. So you heard Natalie talk about lines of credit being best for working capital. Well, there are some times where term loans are good for working capital, and it's when you need that nut to get your business started. It's kind of like when you look at your first year of checkbook and you identify the lowest balance point, like the lowest negative that checkbook would have been if you had put no money into it. That's kind of what you need in permanent working capital. So you can get a term loan for that, and we do that. We've done that for several. So this is a loan program called Pennsylvania Catalyst Loan Fund. It is very low interest rate. It's fixed at 5%. They have very reasonable amortizations. Amortization means is how we calculate your repayment, your actual loan payment over the time. So the longer the amortization, the lower your payment. They have really high loan-to-value ratios. So it's not a no collateral loan like some of these fantastic programs over here, but they will take really high loan-to-value positions that conventional lending won't do. And the fees associated with it are really low as well. So it's a great program, and we've used it for several companies. So I'll give you an example. This is a very new or newer business that was expanding, Thrive Fit Company in Camp Hill. I'm talking a lot. I'll stop here in a second. Thrive Fit Company in Camp Hill, they were finally getting their own location, and conventional lending would only basically get them the location. It wouldn't do the rest of the improvements they needed, so we were able to do a permanent working capital loan for tenant fit out and additional expenses, and that was a good loan at 5% interest rate. So keep it in mind. It is an option, but I'll be the first one to tell you, sometimes it's not the best option. And if you're working with a good EDC, economic development company, they will make sure you are well advised of that and make sure you are connected to the other partners that might be a better fit for you.
Which, by the way, I forgot to mention that assets helps with the credit as far as building credit. So there's no minimum credit score. We look at the history and we try to work with you to build that credit, and providing the small business loan is a way of doing so as well. I forgot to mention that. Important factors.
So basically to ditto all three people here. Me being with the city of Harrisburg, I get a lot of people that actually come into me and actually look for other ways, alternatives to actually find money. Melissa, I talked to Melissa quite a lot. So me and her have actually partnered with a couple of small businesses that were actually looking at startups, actually trying to get businesses going. One thing that I know this was mentioned by Natalie also earlier, prior to, like, your personal credit is very, very, very important before you look at trying to even start a business. That's like the number one thing. Because I know it's a whole big speculation, like, oh, I'm gonna separate my business with my personal. The reality of it is your personal is always going to be in the mix until you get to the point where you have assets, or you're liquid enough, or you have all these pieces that you can actually use everything off of your business credit. You have to actually build all that up. When it comes to me, a lot of times, one of the biggest things I'm looking at is I get a lot of people that's looking for funding. That's really, really it. If you don't have, like, and I'm probably going to say this quite a few times, you're going to need an actual physical business plan showing your metrics, showing how much money you have, how much you're bringing out. Even if it's just an idea, you still have to have that piece. So that's just a starting point, and then you get to the next point, okay, what are you going to do to actually start your business? How is your credit actually going to look when you start your business? So if it's not the best credit, you can look at an advisor to actually help with your credit. I know there's a lot of things online that say we can do this in like 5 days, or next day I can get you $100,000 with just you open up an LLC. That's not true. That is not true at all. If your personal credit is not up to standard, especially when you're starting out with a business, it's not going to work. So you're basically going to be spinning your wheels every single time, probably wasting more money, basically on crackpot ideas. You can look at alternatives as far as like crowdfunding, family sources, or actually saving your funding, saving your money like you do with your own job to actually start your business up. So that's what's a big thing too, is like you're always looking at what kind of money you're going to be having. So a lot of times if you're looking for grant money, one of the biggest things is with grant money is you still have to have a match no matter what you do. So if you're asking for $30,000, $30,000, either you're having it with employees, you're having it equipment, or you're having it in cash, you still have to have some type of match. You just can't say magically, okay, I'm gonna get $10,000 to start a business up. Okay, what do you have to put skin into the game? Because again, it's your business. So when you're talking to somebody, the first thing you have to worry about and always think about, we're not business partners. It's your business. So what are you gonna do to actually get your business started?
Thank you. I turned it off so it wouldn't be talking over you. Thank you. That was all wonderful. So then let's do this round robin again. So talk to me a little bit about some advice you would give to a small business owner if they've been declined for credit. Where should they go next? We'll get everybody.
To an Assets or Finanta, where we provide solutions to your banking needs. That's a promo. So we look, again, we take the time to sit, not the M&T or any other institution does it, but we look at the historical. So again, startups, individuals who they didn't cash flow throughout the year, but they're projected to increase revenue. We take a look at the story and we try to find solutions, whether it's partnering with the EDC or other bank partners to provide the funding. I also suggest other resources such as SCORE, Shippensburg Business Center, other organizations, partners that are able to provide additional services and information on business plan projections and the cash flow to support your business. Regardless of whether you're a startup or an existing business, every resource is beneficial. So,
ask why. If you've been turned down, ask why. So again, like Yesenia said, if you come to Finanta and we unfortunately turn you down, it's not a no. It's a we can't do it at this time. This is the reason we're all in this class. This is the reason we offer different programs to learn. Applying for a business loan and getting denied is just a step in the process. So ask why. Ask the specific reasons why. If it's credit related, what can we do to look at that credit? If it's cash flow, ask what can we do to improve the cash flow. Have that conversation. Why was it turned down? Have them explain that to you. And then yes, if that company is unwilling to work with you on that, come to us. Come to M&T, come to the Finanta, the assets, and we are willing to sit down and work through that business plan. Like I said last time I was in class, the loan I got approved in February, I was working on that for about 14 months. So it's not the first time, might not be the first time, but we're willing to work with you and say, this is where you're at now. This is where we need you to be. If we can get there faster than later, great. If not, it may take a year. We can get there with you. So ask why.
Hold on.
I think that's such a great point. I think a lot of people, you think about going to the doctor. If you don't like what a doctor tells you, you would ask why, you would ask for a second opinion, you would dig a little deeper. People don't do the same thing with their finances, and you should. So I love that point. I'll just add, so many institutions, us included, give you the ability to apply for a loan online these days. You've heard us talk about relationship management and relationship building a lot. Many times if you apply for a loan online, you might get an in the mail, whether it's a declination, probably maybe not a counteroffer, and don't view that as the disability to go in. Like, you can still walk into a physical institution and talk to someone. So please do. That's part of our job. Our job is not to hand out loans, it's to help you build your business, okay?
All right, Melissa.
So that was actually the answer I was going to say too, is ask why. But it's a fact. Just like she said earlier, is like you may have something on your credit report, again, a $50 Verizon bill. So I'm not going to tell my age, but I know a long, long time ago, people were getting scammed. You would have a Verizon bill end up on your credit report for some odd reason. Probably never had Verizon. I lived in North Carolina. We have Time Warner. I didn't have Verizon. So how would I have a Verizon piece on my credit report? This was many, many moons ago. But again, yes, always ask why, because again, you want to figure out, okay, maybe it's something I can actually help, maybe something I can fix, maybe it's something I need to pay off, come back in a couple months later, maybe 30 to 45 days, it may get cleared up, and then I can go ahead with a plan and actually get a business loan and see what you can do. And if you're being turned down, again, it could be, again, other factors as far as like the reason why you're getting turned down. It may not just be your credit. It may be, okay, how are you paying your bills? You may be over limit on certain things. So it could be certain things like that you actually have to reconsider, because again, at the end of the day, again, I'm probably going to reiterate this multiple times, your personal credit is key to anything that you do when you're trying to start a business, regardless of what anybody says.
All right, I'm going to be the Debbie Downer of the group here, sorry. Yeah, no, I get to be really, really bad here. So referring specifically to startups, not an existing small business. I help the SBA teach a class that's called Boots to Business for veterans. And from their own materials that we use to teach that class, they confirm and teach that the reality is most startups start without any form of lending, no form of outside investment. They start with their personal savings, home equity loans, and credit cards. That is just the flat out reality. Most small businesses don't get their first loan until they have a couple years under their belts. Okay? So the question is, well, then what do you do next? So if you have put your business plan together, you did your projections, you identified what you need to get this business started. The answer is you need to be prepared to, modify your capital needs. Look at that business plan again. Can you maybe lease your equipment instead of buying it? Can you bootstrap a few things? Maybe don't get new stuff, maybe used stuff. Can you modify the business plan just a little bit so that your overall expense model is different? Maybe you need to rely on family. But these are the realities, and that's why I get to be Debbie Downer. I'm sorry.
Thank you. That's, a lot of that is really great advice, and one of the things that I heard is ask why. And any one of these individuals up here are available to help you understand the why. But how many people heard Tiffany say last week, did I tell you I lost twice? But yet she sits up here as a very successful, speaker, entrepreneur. And so these are your people. We're your people. Any financial institution can sit down with you and start where you are and help you get to where you want to go, right? One thing I do want to, I don't want to highlight it, but I'm hoping that maybe you all can highlight it. We don't operate in a silo, right? There are many times that we are crossing over and working with our partners to get you to the end game. So can you speak a little bit to how you've partnered and what that has, how that has worked? I know that question, it's a secret question. I just thought of it. So it wasn't on your list of things that I was going to ask you.
Yeah, no, I think, and I can speak for Harrisburg area, but I'm sure it happened in York and Lancaster. But we, as a CDFI, I receive referrals from M&T, from Members First, from the city, from all over, and it starts with a conversation. It's never, hey, I got someone for you. Here you go, good luck. It's, hey, here's the story. Here's what we're looking to do. Do you think you can help? If not, do you know anyone else? Do you think you can help? A lot of times us lenders are connecting, talking about the businesses that we're supporting when we're getting together in groups like this, and hey, I have something that you may look at. Do you mind taking a look at it and talking to this customer for you? I think it fits into your product. Same goes to the way that it comes to me as well. There's some products that I have that they just don't have. So it's very fluid. I don't think I've ever met a banker that says, I'm not going to help you and I'm not going to tell you anyone else who can help you. That's not how we work. We do want you to succeed because, again, you succeed, you grow, you're going to come back and see us for another loan.
Yeah, we have a lot of funding programs that we partner with specifically on projects where there's like a lack of collateral or if there's a better interest rate that will help with the cash flow. That's particularly when we like utilize the EDC or if there's anything to make the project work and it's going to make sense to protect our organization as well as the client. Obviously, we don't want to do bad deals for either or. So if it makes sense, we have a conversation and we make it work. Another thing I wanted to bring up is just to piggyback real quick what you said about like the business plan. I feel like the business plan is a running document that should always be updated. Whether it's the management section or the executive summary, you should always have that updated, not just at the starting point, but throughout, just because it assists with knowing where the business was and where it's headed. So strategic planning, as well as having a conversation with your bankers about splitting the personal and the business. So, for example, I assisted a client who was in operation for about 25 years, and she was only using personal. She got denied for a loan, and it was because obviously she wasn't showing personal income and cash flow for the business. It was all together. So I kind of had to educate her on, let's separate accounts and let's do it. This is what you're going to pay yourself. So providing the technical assistance. So us lenders, that's our job, is to help you and guide you and provide the resources. So never hesitate to ask. That's what I would say. Sorry, I had to add that.
That's great. Thank you.
So your question was about
Partnering.
partnering. Okay, thanks, sir. So okay, when you talk to an economic development group, the reality is our programs don't work alone, as I started with. We have to partner with somebody. We're always partnering with the M&Ts of the world, other financial institutions, Finanta. There's always another piece of the financing puzzle. But what I really want to emphasize here is that this is an entire ecosystem. And it's not for you to have to worry about, to be frank. You just need to find one entrance point. And the rest of the work will get done for you. We will make sure, whether it's the EDC, it's Assets Finanta, the city, the county, whoever it is, we are very well aware of who is doing what in what field for what type of business, and we will make sure you get there. It's kind of a crazy web, but you just need one starting point.
So I'm going to be the Debbie Downer right now. So I'm coming from the banking side and then working with the city, working in economic development. So again, I get a lot of people that come to me and basically looking for funding, looking for help. So a lot of times it's probably not going to go past me if they do not have an actual plan, because it makes no sense for me to send somebody to someone and they're not even ready. So that's when you look for a partner as far as the SBDCs or SCORE or any kind of business-minded person that can actually help you with a plan. Because a lot of times I'm the first stop. So I print a lot of paper out. So again, she's laughing. So what I do is I give you a whole packet. I call it my packet of love. So with that packet of love, it's an actual business plan in there. It's a 45-page book. And I'm looking at one person in particular because she knows. So it's a 45-page book, and also it gives you a marketing and branding analysis plan, and actually gives you a branding plan. And you go through all these pieces, and it basically is a starting point to see where you're at. So it has in the back of the book, it has an actual financial data piece in the back, so you can actually put out basically map out how much you're going to be spending. It asks you certain questions about your demographic, who you're going to be attracting, who you're going after. These are starting points that you have to go when you come to me before I can send you to anybody. Because I have a lot of people. I had one person in particular, he went to me, then came over to Harrisburg University, then came back to me, and he just thought he was going to just talk me to death until he said, I can help you. Like, he had 4 pieces of paper, and half the paper was a logo with 4 sentences on the bottom. I can't do anything with that. And I'm gonna be embarrassed sending somebody to somebody saying, hey, can you help this guy out? And he's like, this person's nowhere near ready. So again, it's like when you want to cross partner, again, you have options. There's a lot of options. But the thing is, you have to have a reality check with yourself to say, okay, am I actually ready to do this? So again, like a business plan, it should be a big booklet to the point where you can actually pick and pull pieces out of it to actually hand to somebody. So you're not, if you don't want to give them a full actual plan, but you should be able to pick and, anytime they ask you a question, you should be able to answer it right then and there. If you can't answer it, you need to go back to the drawing board.
Oh, question, Corey. Get over there, quick.
So in my case, I'm trying to do like an autism advocacy clinic, and from what you're saying, like the little details, like as far as like doing the clinic, should I start looking at spaces and kind of literally pulling those numbers, like get specific like that, or just a broad?
You can pull specific little pieces. Again, I would be as detailed as possible. Again, okay, whatever it's going to take for you to actually build that business, you should look at all those pieces.
Okay.
Because again, you may need it later on, you may not. But again, if you have it right then and there, you have it. So you can answer any questions. And if you have questions, you can ask questions about why do I need this, or how is this going to work, or is this going to cost me enough to actually do it.
Okay, perfect. Thank you.
I've heard that you need a DUNS number to have a business credit. What exactly is a DUNS number, and what is that used for?
Oh man, DUNS number. Yeah, you do need that, because it basically it's your profile. It builds your profile. So you're dealing with Dun & Bradstreet. So if you're looking for basically trying to build your business credit, that's what you need, because it actually puts you on the map so people can actually physically see you. So back to Melissa's point earlier, she does Boots to Business. So you get basically a couple years. So that 2 year factor is basically your it factor when people actually recognize you. So when you get 2 years, you'll get a whole bunch of offers in the mail, even if you didn't do anything with your business. You'll get a whole bunch of offers in the mail, maybe for lines of credit and everything like this. But if you don't have any financials to support it, you can't use it. So 2 years is like your marker to actually see it. But when you actually register, people will notice you and they will see you. And the thing is, your credit does get pulled on that too. So you do get inquiries, you get all that stuff in your DUNS number, well, on your business credit as well.
Yeah, I just had a quick question. Where do I get that book that you were referring to?
I'll get your email address. I'll email it to you. I won't print you a copy off. I'll email it to you.
Thank you.
Just keep that microphone, Jason. I happen to serve on the Harrisburg Initiative Committee, and this is a committee designed to help smaller businesses, and with a big focus on BIPOC, connect you to opportunities that are available in the city. So can you talk to us a little bit about where someone might go to find that information?
Yes, you go to harrisburgpa.gov. harrisburgpa.gov. So you can actually go to harrisburgpa.gov, or you can actually call down to the city and actually ask for a particular person named Hillary Green. She works in a procurement office, and she can actually send you to the right direction of where you need to go. We do a lot of bid processes. Again, you're dealing with the city, so you're dealing with government money, so you actually have to bid a lot of work out. So you may have things for Parks and Rec. You may like T-shirts, stuff like that, like basically for vendors to actually offset costs for us actually doing things ourselves. But those are the type of things that we're looking at. We were just together the other day, like, was that Thursday, last week? We were doing a procurement session for about a couple hours, basically going over the procurement process with the city of Harrisburg, and that's dealing with contracting. Basically, you're looking at that spreadsheet earlier with paving, certain things like that. So when you're looking at a lot of the work for the city of Harrisburg, unless you can actually contact a particular program, like for certain offset things, you may want to contact like Parks and Recreation, because I know they look for a lot of things as far as like video work, things like that. But for a lot of the stuff that we're looking for, we're looking at like for construction pieces when you're dealing with city projects.
Would that be the same location someone would go to apply for a grant? And maybe this applies also to Melissa as well.
So with us, We deal directly for the city of Harrisburg with grants. We deal directly for federal grants. So our grants, particularly, are just dealing with HUD. I have like many hats. I'm one of the other people who actually does the grant grading as of right now for the city of Harrisburg. But we deal majority with our grants come from HUD, and it's going through the housing department. So you're dealing with community block grants and emergency services grants. For the community block grants, this is also another thing I could say. I was going to say this earlier. If you are having an issue with actually trying to write a business plan, a good cheat is to look at a grant, because you have to give all that same information when you're writing the plan. So the main thing they look for is financials, entrance statement about your program. What are you doing? And it has to meet a certain criteria during the HUD regulations. So anything is dealing with, for the most part, any grants that you're going to be getting from the city of Harrisburg are going to deal with LMI, with low to moderate income. So it has to feed that population.
Awesome. Oh, sorry, another question.
Where would we go to register our business as a minority and or disabled veteran business?
Well, that's a good one too. We actually had somebody with us the other week, and she could have been here. You can actually, you can actually call Mr. Jamal Jones. I don't have his work number. I'm not going to give his cell number out and have people bother him. So we were actually, I actually am on one of the chair committees for MSEDC. So we actually deal with minority vendors as well, minority certified vendors, women-owned businesses. It's also a good way to look, and we spoke about that the other week. One of the things is when you're going to go to a lot of these things, the biggest thing is just like here is to build relationships. So we have an annual event. They're not having it this year here in this area. It's called Share. And with the Share event, you have a lot of basically companies come in. They're actually looking for vendors or looking for people for minority participation. The issue is there's no minority participation. As funny as it may sound, but it's not. And that's one of the largest complaints a lot of people have. They can't get the participation numbers. So you look at programs like this, or like committees like that, you can actually build networking. You can actually network and actually get into a lot of these companies and actually do some offset work for a lot of things. So where do I register? Eastern MSDC. I can get you. I don't know it offhand where to go. I can give you that when we get done talking.
I'll check with Jamal because he runs the Impact Harrisburg initiative. So I'll get that information. And we will also be providing a resource guide that will include everybody's name, contact information in the cohort, all of the individuals who have presented, as well as specific places, links that we want you to go to. Okay? Great question, though. Okay, I want to wrap this up because I want to keep everybody on time because we could ask questions all night long. Melissa, did you have anything to add to that from a standpoint of the chamber?
So the one thing I wanted to mention about the chamber is, we have a lot of small business members, and a lot of times people say you should join the chamber. That's one of the very first things you should do as a new business. We're pretty realistic in our membership. It's actually not always the first thing you should do. It depends on what kind of business you are. We have a great success story of a business that was doing business-to-business work, professional services in human resources management. The very first check that she wrote out of her business checkbook 20 years ago was to the Harrisburg Regional Chamber and CREDIC. And she worked her membership, and she has built her business into something grand. She has written books. That was a great example of why a startup business could join. But if you're a retail-facing business, unless you plan on building your business by word of mouth and reputation and knowing bigwigs in different other kinds of businesses, maybe chamber membership's not for you. At least not particularly the regional chamber. But with that said, if you are a business that is going to do business-to-business marketing, or your business plan really depends on you networking and selling, a chamber membership could be the perfect answer, because there are millions of free networking opportunities, coffee and connections, business after hours, social hours, other types of seminars and workshops, luncheons where you can meet other people and talk up your business. You can really work that to your advantage to get to know people and spread the word about your business. So that's the one thing that I would say about chamber membership.
I got one last thing to say. So I know I heard the young lady mentioned earlier about SBA earlier, and I see you sitting in the back. So I'll say this. So if you're trying to do anything with the SBA, look at a particular program. It's called 8A. So 8A, number 8, letter A. So that is a long-term plan. So they basically follow you step by step. And I think, 7 years? I believe it is. 7 years. So you're basically following the step like the entire way. So they're going through you from the beginning process into the end, so you can actually go out on your own. So that's a good program to look at. Yep, the number 8, letter A. You could contact SBDA directly, so you can actually find more information on it. You can, because it's like somebody was saying earlier about applying to things online, about building relationships. So I know at one point, this was like some years ago, it's like there was a lot of like SBA loans that were actually lent out, but the thing is, it wasn't coming directly from the SBA, they were coming from outside lenders. So they didn't actually know who was actually applying for the loan, so they had no chance to actually talk to them to see if it was something directly for them. They were just applying online. So yeah, so I would talk to them to see exactly where you can start at with that, but it's a long-term plan. So it's not something where it's like, okay, we're going to give you this and you go on your own. It's basically a long-term plan to actually work with you the entire way. Mm-hmm.
Wonderful. And Melissa, thank you so much for bringing up membership in the chamber. There's Harrisburg Chamber, there's chambers everywhere. There's the African American Chamber. Leland Nelson runs that. Madonna Awatri is very involved in it. So take advantage of these opportunities because, as we all know, your network is you need to finish the sentence. Net worth, right. And so the chamber does a really great job of offering opportunities for us to go out and meet people. And through those conversations, develop a couple icebreaker questions, get your 30-second pitch, get that down because that's very, very important when you go to these networking events. And it sounds hard, but just put your hand out. Hi, I'm Gail. And I work at M&T Bank. And then just let the conversation go from there. No, use your pitch. And your 30-second pitch, yes. Okay, so last question, and I thought this would just be like so easy, but this is hard, really, navigating through this. So thank you for making it so easy on me. So each one of you have dealt with, working with a small business owner and maybe something's gone aloof and you need to bring them back. What would be the one piece of advice, and maybe it's a word or, a sentence or something that you would want to have stick with them on, how do you rebound from that? If you're struggling to find capital, what would your words of wisdom be? Go ahead, Tony.
Patience.
You just took mine.
Patience.
Oh, man.
So again, it's a learning process. If you're not 100% ready for the loan right now, just have patience. Again, it is a process. The achieving a loan isn't a moving target. We're not changing the programs. We're not changing what it takes to qualify for. It stays the same. So if you're here and this program's here, just have your patience until you get there because you can make it happen. If you're a business owner and you want to if this is your dream, take the time, have the patience, make it happen.
Well, now that he took mine, I'm going to have to find another. Besides patience, use the resources and the technical assistance that we provide you, please. It's free. I spend hours emailing and sending documents, and literally, here's your business plan. All you have to do is import the information, and they won't do it. And then they wonder why they're not getting the loan. So use your resources. Again, community partners. Don't be afraid to go into the SBDC or M&T and say, hey, I need help. Who do I go to?
Mine would be listen and adapt. You are the business creator, and we're not here to tell you that you don't know your business, but another person's viewpoint, particularly a credit person or an accountant or a legal person's viewpoint of maybe how the market looks or how conditions look out there, you know, that outsider's input perspective really you can glean great information out of that. And if you use it to open your eyes and not be closed off to it, you can adapt and make the adjustments that might make you lendable very quickly.
Build relationships. Like, build relationships is key. Because again, if you are trying to hone yourself back and try to figure out what's going on, you may have to take a look at yourself, that maybe your business hasn't been going the way it's been going. One thing also too is don't have an ego about it. So I'm gonna be very, very honest about this. I'm gonna say this, and I wasn't going to, but I am going to say this. So if you are starting a brand new business, one of the things is, just like was mentioned earlier, you are a worker for the first couple of years until you actually get employees. So it kind of, if you're starting on the business and you're not really to that point, one of the things is when somebody hands me a business card, and the thing that I see on their business card, I see CEO on their business card. How many employees do you have? It is you and yourself and your eye. You have no people with you. You don't have 20 people. You don't have 30 people. You don't have a high-rise building. Founder, business owner, because again, you are the business owner. A lot of times, I know what I would tell people: if you don't want to tell about you're the business owner, you could say I'm an operating manager. It's your business, which is the truth. But those are the things you just basically have. You say this. You need to take a look at what you're doing, how you're doing wrong, and how do I correct that? And you could probably be able to move forward. And then it's like, as far as with the credit piece of it, again, it's about building relationships, figuring out how you can actually get your credit up to par, and looking at a lot of things that this basically move forward to actually make your business go.
Awesome. Didn't we do a great job assembling this panel? Can we have a round of applause? Thank you all so much. I know you have day jobs, so we do appreciate that you spent some time with us this evening. Thank you, thank you, thank you.
Thank you.
Okay, that's a wrap. Please fill out your surveys. If you haven't signed in, we need to know if you signed in. I don't know if you checked with Natalie to see if you uploaded a pitch, if it actually made it to us. Winners will be announced next week. What else? What am I missing? We're adjourned. Thank you. Thank you. Thank you.
You're good. Cindy, Andrea, Blaine, you're all good. I have your stuff. I have your stuff too. Yep.
We are back in Harrisburg University next week. Sorry. Thank you. Thanks for asking. Thanks, Blaine. Thank you. There'll be a little extra in your paycheck.